Good afternoon and welcome to the Coinbase Institutional Markets Call. It's Tuesday, 4th of June, and we've got a fantastic show lined up for you today. We have Lauren Abendschein, Global Head of Institutional Sales, joining today to run us through all of the recent conferences. That's Memecoin, Medici, Consensus. She has done the hard work and attended them all, so you haven't had to. We've also got a fantastic lineup with a market update from George. We're going to run through macro with David Duong, Onchain with David Hahn, and then summarize some upcoming catalysts at the end of the show. Now, there's been a ton going on in the legislative side of things. We're also going to cover that in depth as well. There's also been a lot going on in maybe the more fun side of the space. Roaring Kitty is back. George, have you been keeping an eye on this? What has been going on in general? Is it all kind of the craziness is back?
Yeah, it kind of feels that way. I mean, to be honest, if you had asked me just a couple of weeks ago, I mean, I wouldn't have bet on it that that would make such a big comeback. But the meme stock frenzy does seem to be back. So let's see if that's going to spill over into meme coins as well.
Yeah, looking forward to hearing what, if anything, has happened there. If you are watching on YouTube, don't forget to scan the QR code on your screen now, and that will give you access to all of the team's fantastic research. If you are listening on podcast, all of that information will be in your show notes. And no matter where you're listening, don't forget to like and subscribe. That helps others learn about the show. But without further ado, we've got a ton to cover. So let's get into our first conversation. So we are super excited to have Lauren Abendschein, Global Head of Institutional Sales, joining us today. Lauren, it's your second time on the show. Welcome back.
Thanks so much. Glad to be here.
So you have been traveling a lot. We were just chatting before the show. It's probably almost feels like every single week over the last couple of months. And you managed to take in a lot of great conferences and speak with a lot of clients. We'd love to kind of just get into that today and hear about some of those conversations you've been having.
Fantastic. Yeah, I think it's been a really important period to understand, what's going on in the space, because we've had such significant developments, over the last month across a bunch of different themes. And so seeing who's showing up and who's engaging in the space has been really informative. So looking forward to chatting a little bit about that today.
Amazing. So let's kick off, I think, with Memecoin, which was in LA and probably 3 or 4 weeks ago now. Do you mind just starting with a brief summary about what Memecoin is, who typically attends, and then we can kind of go into some of those conversations that you were having there?
Yeah, Memecoin is really that sort of global conference that brings together sort of the who's who across corporates, asset managers, and the broader investment community. So it's a fascinating place to really get a pulse on how, the non-crypto natives, the non-crypto focused, institutions are thinking about the space. And this year was certainly no exception in terms of the profile and engagement, and sort of strength of the conference. So quite an interesting year.
Amazing. And obviously this is post BTC ETF, and it's pre-ETH ETF.
That's right.
What was some of the, I guess, most interesting or surprising conversations you were having with some of those large allocators and money managers?
I think what was really different this year is sort of, if you chart the path of certainly our engagement and involvement with Memecoin as a crypto firm, when we first got involved in the sort of 2021 kind of timeframe, we had a ton of engagement, folks just really wanting to learn, every sort of quarter wanting to come and understand what was going on with the crypto space. And of course that dipped, along with, the broader sort of crypto winter that we experienced. This year was really encouraging in that we saw real discussion of use cases and real discussion of institutions that wanted to understand where this fit in their portfolio and that were already doing the work on the space. So I'd say it was a more focused and also, more productive level of engagement. I point specifically to several corporates, and this is a broader theme that we're seeing these days, corporates really wanting to understand how they might engage with blockchain technology, engage with stable coins, and find real use cases who had already really done the work on the space. Similarly with allocators, we saw it's not a starting from scratch; it's really a deeper engagement.
Amazing. And when we talk through some of the ways that some of these corporates are thinking about using blockchain technology, are we thinking kind of on-chain money market funds, or are we thinking cross-border payments? Or is it kind of a bit of everything, and it really depends on who you are, like what use case might be most attractive to you?
I think there's a keening in on the payments use case. So certainly context around remittances, as well as at intercompany payments. And so, that's where I think we're seeing the most engagement. There's still some discussion around, using NFTs to engage with new audiences, some creativity around that. But it's really that payments use case that I think is of greatest interest. Certainly tokenized money market funds and the innovation there had its day and is part of the conversation as well.
So, Lauren, I didn't get the chance to go to Milken this year, unfortunately, but I did get to go last year. But at the time, I feel like we were talking about very different topics, and you kind of went over that. Now we have, of course, the spot Bitcoin ETFs. Soon we'll probably have the spot ETH ETFs in the US. In any of the conversations with institutional investors, did they mention what additional hurdles or roadblocks they think still exist for broader institutional adoption of the space?
Yes. So I think this has come up, honestly, in a number of contexts. And when we talk a little bit about consensus and some of the, more crypto-focused conferences, I think that's where we saw the kind of RIAs, show up who were furthest down the line towards really wanting to do that work. But yes, with ETFs in the space, that does change the conversation for a variety of institutional investors who now find this to be, more accessible and have initiated work on the space to understand whether it's getting their risk committees comfortable, whether it's understanding infrastructure in the space and really driving forward on that due diligence.
And I feel like every time you get a bunch of TradFi people in the room, they always want to talk about the regulatory landscape. How much discussion was there this time around the evolving regulatory landscape of crypto?
Well, it's just funny to see, how fast that conversation changed in the span of a month. If you look at the conversation, at Milken, which is, second week of May, I think that was quite a surprise in terms of, changing attitudes on ETH ETFs, pre-Fit 21. So I think the conversation, really evolved quite significantly over the course, but certainly, regulatory, the regulatory space remains an overhang. And I think, that was a part of the conversation during Milken for sure.
And Lauren, how would you compare the differences between Milken, which I feel like are more these TradFi institutional players, and Medici, which is, of course, much more concentrated on the crypto side of things?
Yeah, well, Medici sort of has that like Milken of crypto vibe, where it's bringing together, the sort of top minds, top money managers, top corporates. And so it's a great comparison and a great pulse check. I think the conference this year felt incredibly vibrant. We are in an environment where projects are coming to market at an ever faster pace, and the quality of those projects is so high, and that was on full display at Medici. From an institutional investor perspective, I think there's a cohort of allocators who really value staying out in front of what's the latest and greatest in the crypto space, and I think they're quite attracted to the Medici conference for that reason. Medici attracts sort of a cohort of allocators who are really excited about the space and want to dive deep on it, and that was no exception this year. It's encouraging to continue to see these thought leaders from an allocator perspective, whether it's top consultants or leaders across the pension space, really showing up and wanting to dive deep on the sort of the latest cohort of protocols and developers.
Yeah, I totally agree. I was fortunate enough to check out Medici as well, and I was just kind of bowled over by some of the progress that a lot of these projects have made, but also the cross section of people you have in the room. I think it's super smart of Adam and team to put it on the same week as Milken, because suddenly you've got people at the largest money managers spending their time at Milken, and then they can pop across for a morning or an afternoon or maybe even a full day at Medici, and actually kind of really get under the hood, if you like, of what's going on. One thing that kind of really struck me there was as you mentioned, everyone, legislation is clearly very much topical conversation there as well. And then also just kind of thinking through layer twos and usability. Now that we've got the pipes for new projects to be sub a cent maybe, or at least certainly very, very cheap and quicker transactions times. What is now possible? And I think we're starting to see some of those use cases. Still early, yeah, but we are starting to see a lot more.
Yeah, and I think people are underestimating that a little bit. That was one of the themes is, folks kind of who aren't as deep in the space coming back and, re-engaging are seeing that actually a lot of development in sort of the tools to build on chain, the ease of building on chain, have really expanded over the last year. And I do think that was part of the conversation, particularly for those who aren't, as close to the day-to-day, which is encouraging, being able to see that we're making real progress towards ease of on-chain building is exciting.
And then you're at Consensus, and it's a kind of I was trying to pitch this. Is it between Medici and Milken? Is it probably it's a kind of more crypto native? It was in Austin, so it was certainly on the hot side as well. But how would you describe Consensus versus the previous two?
Yeah, so Consensus, I think, remains a really important place for conversations around policy and regulatory topics. It attracts a really great and high-powered crowd, and actually, we see a lot of politicians come through that conference. Also, corporates. I think it's really a place where large corporates have come to really understand how to build, where to build, and have those kinds of conversations. We also see a great allocator track there, and so accordingly, you'll see funds come and engage. It's not as technical a conference, so you're not going to see as much of that kind of developer theme, but I think it remains a really important flashpoint for the community to come together.
Yeah, and the timing of Consensus was great because it came after the ETF approvals. It came after the House vote on FIT21, the SAB 121 votes through the Senate and the House, which unfortunately has since been vetoed. But throughout Consensus, there was definitely is riding the tailwinds of a policy shift. I'm kind of curious, what were the general impressions of people there towards policy? Are they very optimistic in the coming months? When do they think policies will take effect? What kind of policies do they think will take effect? And just generally, what was the forward-looking guidance from a lot of the people at Consensus?
Yeah, it's a bit of a roller coaster because everyone was digesting that news, and then also sort of anticipating that possible veto, which did come on Friday night for SAB 121. So it was a lot of really trying to feel out, where are we here? Is this a total regime change? Are we seeing a fundamental change in attitudes, or is this a little bit more of a sort of temporary reprieve? And I think one point of consensus, so to speak, was certainly that the developments that have happened here, that change of tone on ETH ETFs, the passing of FIT21, the significance of that, particularly having 71 Democrats come over to vote towards the passage of that bill, has not really been broadly digested. I think there was a feeling of we're in a little bit of a crypto echo chamber, and there's a recognition by those of us that are so heavily focused on the space that this feels like a real shift, but it hasn't really been digested, broadly. And of course, we are still, looking at these as early indicators, not necessarily, any sort of conclusive regime change, indicator.
Yeah, just one follow-up question on that. I'm kind of curious, there's different parties at Consensus, whether that be corporates or investors. How might corporations take these, regulatory tailwinds versus, say, investors, and how are they kind of approaching these changes?
Yeah, it's a great question. I think what's interesting here is you have a number of corporates that are attending who have these proof of concept projects, and they're trying, the representatives of those, are trying to push those over the line and get real buy-in. And so having, something in your back pocket that says, look, we're seeing a change, in terms of political, attitudes, we're seeing, adoption and interest by peers. These are the kinds of data points that can help push the conversation forward. And what's exciting about where we are right now is that there are proof of concepts that are ready to go, that have been thought through, that have been developed. And so you're looking for the right catalyst and the right environment in which to push those forward. So I think that's exciting on the corporate front. From an institutional investor perspective, I do think it's a little bit different in that it's a little more fluid. This is kind of looking at there's a lot of different factors included, but for sure, are, regular, as we've all discussed many times, the regulatory landscape is a huge impact on appetite to invest. And so this is information that I think is still being digested by institutional investors, but was a really important part of the conversation and when they were eager to understand.
Awesome, thanks, Lauren. One other thing I wanted to just double click on is sentiment across the three conferences that you've been to. So Bitcoin is at 70,000. We've got ETH at $3,800. But interestingly, from a sentiment perspective, it kind of doesn't feel like quite the same way it did, let's say, during summer 2021 when we had the previous bull run. So just curious if you can elaborate a little bit more on the sentiment on the ground, and what do you think about this discrepancy between the mood of sentiment and price levels, which are obviously super bullish?
Yeah, it's funny. I spoke to a couple institutional investors who were feeling incredibly bullish. Like this is the moment, with the quality of projects coming to market, with the change in sentiment, with the potential for an ETH ETF. This is just was identified as an incredible opportunity. At the same time, I spoke to a number of managers who were sharing that it remains challenging to raise capital. It remains challenging to really capture allocators' attention. And part of that just has to do with that lack of fully digesting, and paying close attention to the space, and sort of digesting the change in the crypto landscape and in sentiment. So I think, right now, in 21 we had, as I described kind of at the start, really the attention, of the broader, institutional investment space. Now I think crypto is still fighting for mind share, and that's probably prompting a lot of the sort of slower to react, sentiment.
And Lauren, your role is a global role, so you're kind of speaking to clients in Europe and APAC and Americas, et cetera. I'm curious, how are those outside of the US thinking about this? Obviously, like I'm in New York, you're in San Francisco. It's a big thing, but I'm very conscious that maybe it's not that big to everyone. So how is the rest of the world thinking about it?
Yeah, I mean, there's a big extent to which, the rest of the world has kind of moved on. Obviously, a change in attitude here in the US would have a really significant impact. But, importantly, things like ETFs and ETPs have flourished in other jurisdictions. There's a lot of interest and focus from new projects that have developed, and we see obviously massive volumes internationally, and so I think there's a significant extent to which the sentiment is the U.S. has lost out in really significant ways from having from not being as hospitable to crypto. So I think that sentiment is there.
Lauren, you've been at this longer than any of us have in terms of trying to get institutions involved. I'm not going to dox you and let you and let you volunteer how long you've been in the space, but we've been saying for a while now that the institutions are coming, and year after year it seems to happen. It does now seem like this is the moment where institutions truly are coming. Would you agree with that from everything you've seen from all these conferences? Is that the feeling you're getting, despite the sentiment that George kind of talked about?
I do think we've never been closer to really having that, durable institutional adoption. And I appreciate that may be a little bit controversial, but what's different here is we are building that interest based on real use cases and real discussion of, the role of crypto in an institutional portfolio. I think it's being built this time around in a way that's much more measured and much more durable as a result. And that's based on enablement by really important developments, including ETFs, which expand the TAM dramatically and make this space more investable. So I do think this is a fundamentally different place, now than we have been in previous cycles.
Yeah, it's certainly a lot to keep an eye on, whether it's the legislative side of things or kind of the global side of things. But it's funny. every single week we kind of think what we're going to talk through, and every single week there's always a ton of like things moving around to keep us interested. Well, Lauren, thank you so much for joining. We're going to move on to some news now, which actually is going to cover a lot of the political side of things. So we'd love you to stay on as long as you can. But as always, thank you so much for joining.
Thanks for having me.
So as mentioned, we kind of went through a lot of the legislative updates there with Lauren. And just to kind of touch upon a few here, we had Coinbase and Ripple and A16 donated $25 million to the Fair Shake PAC. We've also got Trump accepting Bitcoin Lightning payments. And then if you look at the Fair Shake PAC from a fundraising perspective, it's actually number 4 behind some of the more traditional PACs. So DH, would love to kind of get your thoughts on this. Like when you put all of those things together and the conversation we've had just there, but then you also contrast it with Bernstein saying that the fact that Biden did veto on Step 1 and 21 on Friday evening means that perhaps the SEC wasn't politically motivated with their approval of ETH ETFs. So I'm curious, like, how are you kind of thinking about that?
Yeah, definitely. I think there's a lot of speculation that we can do when it comes to what the SEC or what the reasoning why they approved the ETH ETFs. I think from my perspective, one thing that makes sense to me is that if there's any legislation for crypto in the US, right, whether that's Fit 21 or any of the other bills that we've seen, any of these wordings, ETH would not be under the purview of the SEC. It would be classified as a commodity. So whether that's Fit 21's decentralization thresholds, et cetera, ETH would eventually move out of the SEC's purview, whether that be in a few months, a few years, et cetera. That's kind of like the general trend, especially with the passing of the Fit 21 in the House, with the bipartisan vote, with the pass to push through the SAB 2021 veto in both the House and the Senate. And even though that was vetoed, actually the original House introducer of that bill said that that's not the last word. He recently made a press release yesterday saying that they might bring this back into Congress to see if they can get a veto overturned. So the House actually released a press release on this yesterday. So I do think that there's still political tailwinds. I don't know how much of this is going to be materialized in law in the next few, say, weeks or in the very short term, but I do think there's a lot to look forward to in the next couple of quarters.
Well, one thing I did think was kind of interesting was just the time at which that news release came out, 7 p.m. on a Friday night. It's certainly an interesting time to perform a veto.
Yeah, definitely. I think one thing that was also interesting about the veto was the reasoning why they made out the veto, which was they were waiting for more, quote, comprehensive regulation to come out of Congress before signing something into law. And I thought this was a little bit misleading because SAB 121 is an accounting rule. It's not something that would be passed through Congress. It's an SEC accounting bulletin. So neither Fit 21 or any of the other bills would address these specific accounting standards. Fit 21 is generally engaged with a lot of definitions around how to register commodity securities, digital asset brokers, et cetera. And so it did feel like it was kind of a way to appease people and say that we do want better regulation, but but also be able to say, follow through with their veto promise and not show weakness in this time.
Yeah, so with that news, obviously markets are going to be moving. So let's move to a market update now. George, what's been going on in the price action? I know we've kind of trended a little higher in the last couple of days, but can you dig into it a little bit more for us?
Yeah, for sure. So, I mean, for the most part, we have really been trading in the sideways range over the last 7 days or so after this initial wave of excitement about the ETH ETF has waned a little bit. If you look at Bitcoin, I mean, again, it has been in this range between 66 to 70K over the last week. BTC dominance is pretty stable, around 55%. And one thing in comparing BTC to altcoins, actually, that I was looking at as well, because obviously a lot of altcoins have not performed super well. But then if you look at the last few halving cycles and how long it took for big altcoin seasons to start, and as a proxy for that, I just look at BTC dominance, and typically it's around 200 to 300 days plus minus after. And obviously not a very big data set there, I agree, but it just helps to put things into perspective a little bit. On ETH, we've also been, again, pretty stable, 3,750 to 3,900. So been in that range, obviously, over the last 2 weeks, more or less. So everyone's really now waiting for the ETH ETF to start trading and launch, as we discussed in last week's call. And the big theme is going to be to see how strong the inflows are going to be. And as a reminder, last week's call, we were saying that probably somewhere between 10 to 25% of the volume that we're seeing going into the Bitcoin ETF inflows.
So George, when you look at both BTC and ETH and the approvals process for the ETFs, like how do you compare some of the price action, and maybe if we extrapolate Bitcoin out to Ethereum, what could we perhaps expect?
Yeah, for sure. So I think if you look at the Bitcoin ETF, the playbook essentially that we have seen is, firstly, we had the rally going into the approval, right? And again, I mean, there are a lot of differences as well, because obviously for Bitcoin, it was very well telegraphed. You had a lot of event-driven funds, for instance, having time to position themselves for it. But you did have that rally. And then after that, obviously, there was sort of which again was larger because of that positioning function, the sell the news event, which we didn't have as much in ETH. And then with Bitcoin, you obviously, once they actually started trading and people realized, the inflow is actually super strong, you had that secondary rally that started afterwards. So I think that's the thing that a lot of folks are going to be watching out for now, as I mentioned, that just seeing how strong the inflows are going to be into the ETH ETFs.
Now, tell us about Roaring Kitty. What is and any read across to crypto?
Yeah, so that's definitely been a theme that's been discussed quite a lot over the last few days in the crypto community, and I guess in the meme stock community as well. So Roaring Kitty is essentially an internet personality that has pretty much, I think, I wouldn't do an overstatement if I say single-handedly started the meme stock craze during COVID in 2021. But he's been very quiet for a long period of time. And then actually on Monday this week, so yesterday, I believe, just posted a screenshot of a 9-figure position in GameStop, so a combination of spot with calls. And obviously, on the back of that, it didn't take too long for folks in the crypto community to start paying more attention to meme coins again. A lot of talk about cat-themed coins, given as Roaring Kitty, right? On crypto Twitter, there's a bunch of other meme coins that did well. So I think in last week's call, we talked about not coins. So that was up 150%, for instance. Yeah, so that's the meme coin side of things.
I'm surprised. Do we have a real Roaring Kitty meme coin yet? I feel like if we haven't, that just surprises me.
I think I would be surprised if we have like 100 at this stage. I think these things are so quickly to get deployed. So I think, yeah. There's so many nowadays.
And looking across some other bits of news as well, so we saw Binance restricting stablecoins not issued by regulated companies from June 30th in Europe. Obviously, you sit in London. They haven't said what stablecoins, but I guess one could assume USDC would be one. And interesting that they're continuing on their path to, I guess, cleaning up a little bit.
Yeah, totally, 100%. As you say, I think is they're trying to become more compliant, and that's obviously the first phase of the implementation of MiCA on the stablecoin side. And yeah, definitely, I agree. I think USDC should be top of the list of what's going to be allowed.
Yeah, and what else, George? Other things you keeping an eye on?
So on the Bitcoin spot ETF side, I mean, we had $171 million of inflows last week. Started pretty decently with $100 million yesterday on Monday. So overall looking pretty solid. You can see that CME BTC open interest is up again. The short interest there is up from 5 billion to 6.5 billion over the last week or so. So you can clearly see again that folks are putting on the basis trade again, which obviously coincides with more inflows into the spot products. And CME basis around 10 to 12%. So that makes sense. On the unlock side, the next week or two, again, we'll definitely keep an eye on that. So we've got Aptos next week on Tuesday with a $100 million unlock. And then the week after that, we've got Stark, IMX, and Arbitrum with unlocks in the $60 to $100 million range as well. So definitely worth keeping an eye on those as well.
Perfect. One headline I saw was Core Scientific, one of the larger miners, signed a 12-year deal with AI hyperscaler CoreWeave at almost $300 million a year recurring revenue. That I thought was pretty interesting, and obviously we know miners are looking to utilize their compute in the most efficient way possible. I'm curious how you kind of think about that, and whether or not other miners might do the same thing.
Yeah, 100%. I definitely think, I mean, we do talk to a lot of miners on the trading desk as well. And I think and that's definitely a recurring theme is obviously, and it's obviously it had picked up during the bear market more because folks were looking for additional revenue streams when prices were down. So we have heard of other miners, for instance, in the context of ETH moving to proof of stake, for instance, reutilizing some of their computing resources and reallocating that, for instance, towards more, let's say, AI-driven applications. Because of that, obviously, you do need a lot of computing resources for that. So I definitely think that that's a theme that's going to continue.
Perfect. And then I guess one last thing on the ETF side of things, we'll keep an eye on the monochrome ETF in Australia. And they just said their day one of trading today, and we'll come back next week with a bit more data there. Great, thank you, George. David, moving on to macro, what are some of the things that you have been watching this week?
Yeah, thanks, Ben. It's actually been kind of a busy time in macro in terms of events, but strangely, it feels like markets are having a hard time trying to get a good grasp on what those catalysts are. Like we had several elections in India, South Africa, Mexico. Some poor bond auctions globally in the last week, but corporate earnings, on the other hand, seem to get a boost. In the U.S., though, I'd say that we had a few weak economic activity indicators this week, and I think that those are taking more significance ahead of the Fed meeting next week. That two-day meeting actually ends, I believe, on June 11th, or starts on June 11th, but I think ends on June 12th. But yesterday, we actually saw a downside surprise in the ISM Manufacturing Purchasing Managers Index, or the PMI, which was, led by some weaker demand. I think a lot of people have been counting on demand to actually sustain us over this last period. So it's suggesting that there is probably some stagnation. I think that the idea of stagflation is starting to become more enshrined in people's minds. We actually got another day of weak data today, just with the JOLTS job data as well. So you see that a lot of assets are actually paring back some of the moves that they've gotten over the last week or so. So the idea of the soft landing environment has started to kind of fade. Typically, we think that bad news could be good news because it means that the Fed will respond to that and that it's very possible they would cut rates. But it doesn't seem like the market's taking it that way. It seems like bad news is just bad news now. We have a chart here of the Atlanta Fed's GDP now indicator, for example, and it's showing that actually, if anything, like the reading has actually been revised a lot lower. So it seems that the economic data misses are actually starting to materialize in expectations also becoming weaker. So if the big question is, if inflation doesn't come down faster than the GDP figures, then this could actually be seen as a pretty negative scenario for the macro environment.
And David, just to double click on that. So the Fed GDP now that's a kind of an estimate of the real-time GDP. Is that correct?
Yeah, I mean, it typically doesn't really match up that way, but yes, like given the fact that we had this GDP miss in the first quarter, where it kind of only increased by 1.3%, which was below what people were expecting, I think that this is going to be reflected in weaker estimates for the second quarter of this year.
Perfect. And non-farms on Friday, what are we hoping for?
So after the weak JOLTS number, like typically with these things, we want to see a gradual loosening of the job market, not a very sharp one. I think that would then kind of feed into the estimates that or expectations that we have for the Fed kind of cutting sooner rather than later. Right now, I think that it's reasonable to expect the Fed to start cutting rates, but perhaps starting in September of this year. But I think that if there is a dramatic kind of move in the non-farm payrolls number that would kind of go in line with what we saw with JOLTS today, then I think that would kind of shake markets' confidence, and that would be a problem for us.
Interesting. Thank you, David. A lot of things to keep an eye on there. And then moving on to Onchain, DH. What have you been keeping an eye on?
Yeah, there's a couple of things, actually. I would say four major points. The first one, kind of circling back to George's earlier point about Roaring Kitty and meme coins. There's this, I wouldn't call it a protocol, but there's a service built on Solana called pump.fun, which is a meme coin launching, or just a token, actually, just any token, but mostly meme coin launching platforms. And they take a fee from the coins that launch on their platform. And they made $1 million in revenue yesterday. Now, this is more than double what Uniswap made in fees. And it's actually the highest revenue protocol just on chain today, which is kind of incredible. They have no token. It's just it's a pure, really, it's almost a business. And I think that's something that's worth keeping an eye on. And it's also kind of an indicator in terms of just meme coin activity. Are there more coins that are launching, trying to get in on this hype? And I think right now the numbers say pretty confidently that's a yes. So that's the first one. So pump.fun with their $1 million in daily revenue.
One thing just on pump.fun, so it looks like the USP, if you like, is all of them are a fair launch. So there's no pre-mine. And I guess if you're appealing to retail, I think that's probably something that certainly in the GameStop mania, fairness is certainly kind of key to that principle. So maybe that's kind of part of the reason this is seeing such growth.
Yeah, definitely. I mean, I think fairness is one part of it. There's also some controversies around people who know when they're going to launch it. It's a fair launch, but then they'll snipe, which essentially just means they'll immediately buy tokens because they know exactly when they're going to launch it. So they're actually going to get more than what their original allocation is. But you're absolutely correct. I think in general, the principle of transparency and fair launches is quite important, especially when we have many token unlocks this year. It's kind of giving a contrast. So you have a meme coin that's launched at FTV. There's no unlocks. Maybe there's some snipers who are trying to get additional allocation in the beginning, but at least in principle, they're pretty transparent with their unlock schedules compared to some of these bigger projects that have billions of tokens who are going to gradually unlock throughout the next couple of quarters.
I just went onto the website as you brought it up, and I think in the last 20 seconds there's about 20 new tokens created. It's crazy. I'm just trying to make sure I'm watching the right thing. Anyway, bananas, but people are having fun. Fun is important.
Yeah, definitely. Less fun though, there was a hack on VeloCore on Linea, which is an Ethereum L2. And in order to stop the funds from flowing out, the Linea team, they actually stopped block production in order to stop the bridging off chain for the hacker to escape with the funds. I think this is something that's worth noting. Maybe not for any material short-term market impact, but primarily because it highlights the risks of centralized L2s. Previously, a few months ago, Blast also had a major hack, the Blast L2. They did not stop their chain, but there were some calls by people who were saying, hey, maybe you should stop the chain because you're still centralized. It might be worth it. So I think there's definitely something that's worth highlighting, especially as decentralized sequencers are not live yet. All L2s currently are still done by a single block producer. Sometimes some of them you can do forced transaction inclusion on the L1, but in general, that's not really feasible for most non-technical people. So this is something that's definitely worth keeping an eye on. And also when it comes to Bitcoin L2s as well, there's a lot of unknown trust assumptions around there. So I think people are going to be a little bit more aware of what kind of risks they're taking with L2s, and also the future scaling roadmap where these risks will eventually be mitigated.
So I think that's a really good point. And the app that was in question was actually triple audited, and it still had this exploit. So I think in a lot of ways, wouldn't you as a community kind of expect that, that Linea is actually doing the right thing here in terms of stepping in and actually, preventing these funds from actually making its way back to Ethereum? But I'm curious, David, we've seen a lot of L2s launch on Ethereum alone, and L2s are becoming a big issue, or rather a big theme I think we're seeing across the ecosystem. Any thoughts around like where you see the L2 environment kind of materializing as far as the big leads, like the winners here in the space, Arbitrum, Optimism, Base, like already having like a really kind of large kind of step in here? Like, how do you think this kind of factors into some of their positioning inside of this market?
Yeah, that's a great question, because we do have dozens of L2s at this point. I think one of the great things about L2s, and I think Vitalik wrote about this in a recent piece, is that L2s allow you to kind of diversify what's important to you, whether that's your community or your culture, whether that be technical trade-offs, whether that be your execution environment. I know Mega ETH is doing the EVM, but they're optimizing it incredibly. So there's going to be a lot of different trade-offs in L2s, and people and users who are educated enough can go ahead and pick the L2 that suits their needs the most. That said, I do think there's going to be a winner take most in general when it comes to generalized L2. So for example, Base, Arbitrum, these classic EVM chains that are very, very generalized, not application specific. I do think that you're going to have these network effects of liquidities, users onboarding. For example, Coinbase, we have our embedded wallets that are launching on Base. And these kind of things are going to create a good positive flywheel for more users. That said, I do think that the ability for, say, Linea to say, I want to stop the block production might make some people feel safer when it comes to certain DeFi apps. On the other hand, it might also make people feel a little bit less safe, because if they're not affected by the hack, but they're saying they have a collateral position open, or if they just want to move their money off chain, they have some something to pay, they want to liquidate their assets, they can't do that. So there's going to be trade-offs where people feel most suitable for themselves when it comes to risk across the different L2s.
Yeah, there's always that challenge between being decentralized and the benefits of that versus centralized. I'm curious, there was also some news out of Uniswap as well around a governance proposal. How are you thinking about that?
Yeah, that was also quite interesting. So just for context, Uniswap, the fee switch has been a very big topic of discussion for a long time. So turning on the fee switch. But before you turn on the Uniswap fee switch, the idea is that they ought to upgrade their governance process on chain, because only those who were participating in governance would actually earn the fees. So there was supposed to be a vote on May 31st or June 1st in order to implement this proposal, which has been delayed. So Uniswap Foundation, they tweeted a post saying that a stakeholder had some concerns and that they were going to delay the vote, the on-chain vote, for some time. There wasn't very much transparency, and I think that some people and some token holders were kind of annoyed where there wasn't very much communication. There's no set systems for disclosures about what's happening, etc. And so I think what this really highlights is there's still this important off-chain social kind of stakeholder politics almost when it comes to these protocols that just being a pure token holder doesn't give you. And so I think this kind of highlights in the forefront how this might evolve, what kind of rights do token holders have, how much of an involvement in the community are you going to have if you're just a minority token holder, if you only hold 1 or 2 uni, versus if you're a major early investor. And I think that, I don't know if there's any right solution to this, but I do think that it's bringing this into the discussion, which is going to be quite an interesting one when it talks about the future of DAO evolutions and what that means for on-chain governance.
Yeah, we're still learning here, aren't we? Everything here is new, and people are trying to figure out the best path. Now, what about Arbitrum as well? There was something happening within their ecosystem.
Yeah, definitely. I mean, speaking of DAO governance, so the Arbitrum community, they actually voted to send 200 million Arbitrum to fund a gaming initiative, which is around just under $250 million US dollars today, which is a good chunk of money. Just for context, that's more than the budgets for Elden Ring or Baldur's Gate 3, which are some of the most highly acclaimed games of recent years. So there's a lot of money that's being put into gaming, on top of all the traditional VC funding that we've had throughout the last cycle for blockchain gaming. I think there was some controversies around, there's always been controversies around the usage and management of DAO treasuries, where to best use it, how do you use it to kind of improve value to your token holders in the longer term. I don't have any strong stance on this specifically, but I do think that it's kind of interesting to see that tokens do also have, we're talking about how Uniswap tokens holders might not have as much power, but on the other hand, Arbitrum holders do have the power to kind of allocate their token arb or the treasury holdings of Arbitrum into different kind of sectors that they believe would be best beneficial for their chain. So just something to be keeping an eye out. Maybe gaming on Arbitrum might be a theme in the coming months or years. Games take a long time to develop, but this is also some pretty big major movement of money into gaming.
Yeah, certainly a space that's in a lot of investment. I'm excited to see a game that just captures people's attention, where you're playing it, you don't know it's on chain, and we start to see the same numbers as other kind of AAA rated games. We will get there. It's a matter of time.
Looking forward to that.
Yeah, cool. Thank you very much, David. So that is a wrap for this week. Just quick summary on some of those upcoming catalysts. Non-farms on Friday, Fed meeting next week, and then we have a couple of unlocks, as George mentioned as well. So keep an eye out for those. We're also still expecting to hear more around the ETH ETF, and legislation continues to move forward. So lots to keep an eye on as the space continues to evolve. But thank you all so much for listening. Thank you to Lauren for joining and giving us a great rundown on the various conferences that we've had in the space recently. Thank you to the Davids for their fantastic research, and to George for filling us in on the market. And of course, for you guys for listening in. We'll see you next week. Take care.